You guys, we got a lot of you guys online, and then Tyler here is in person. So thanks for joining me on. This is actually the class I need for my KW teacher certification. So we threw it in a little bit last minute here. So so excited to be here with you guys today. So for those who have ever been to any of my classes, you know I always start off with the same question, which is you guys like logged on today or you came in person to a class called Profitability Agent Financials. Why did you come and what are you looking to get from today?
Profitable agent for sure.
Okay,
like,
so
handle our finances, the economic side of it, like how many phone calls or things together or deals we have to have or pay for certain profit, like all those things are jumbled in my head. I'm trying to like
Cool. So there's the aspect of profitability in general, but then there's a little bit more of how do I break it down into like what actions do I need to do to get to that profitability?
Right.
Cool. We're going to talk a little bit more about the system of profitability today. Although if we get some time, I will certainly go through really what's called an agent planning clinic, right? A business planning clinic. So we'll hit some of those small things with that. So cool. Anybody online?
Yeah, I think this is one of the classes that should probably be taught new agents as they're coming in as to how to start this. I mean, it's a business, so it needs to be treated as a business. And I think people don't know how to start their own business. And I think these are the basics that everybody should know. And this is probably what they need to know really before they master the fundamentals of real estate, the contract and everything else.
Yeah, you're exactly right. We're talking about how it is a business today, not how to sell real estate or how to, do that. Like we're talking about your business. So I love that distinction. Thank you, Judy. Let's get one more.
I have never been in your class, but looking at the title, I was giving me the impression that I have to start making money before I start thinking about it. I may be wrong.
Start making money well, when you have the system for where the money goes, that's what's helpful, right? But we are going to talk about some general things that do apply to your business. How much should you spend on lead generation? How do you actually budget, things like that are going to be helpful in your actual execution. So
okay, good.
Well, thank you guys. Just a little bit about who I am. My name is Austin Carroll. I own the Blue Key Real Estate team. I also own Blue Key Development. We have a portfolio of about $14 million in real estate. And then as a real estate sales team this year, we'll probably do about 100 to 110 transactions, somewhere between $35 and $40 million in sales. Last year, we were the number 5 team in the region, team meaning 2 people. It's myself and my best friend, Will, who's joined me in my real estate venture here. And then I'm about to turn 30, so really built 2 businesses very quickly. And then something that I had to get really real about is we've got a 15-month-old now, and so my time totally changed, right? The time that I teach, the time that I work on investment deals, the time that I work in real estate sales. So profitability becomes a little bit more important when your time gets compressed and you have more people relying on it. So that being said, we are talking about today as if it is your business. Like even if you are a solo agent, it is your business of being a solo agent, right? And so that means you have a budget. That means you have all of this other stuff. And so there's kind of 6 things that we talk about here that are key to a financially sound business, right? So stop thinking about yourself just as a realtor if you're solo, or if you're a team, like make sure you're thinking about it as a business. And so the first is to set a profit goal that funds your big life and pursue the activities to achieve it. So there's 2 parts to that. 1, you have to have a profit goal, and then 2, we have to know the activity. You were kind of asking a little bit about that. So we're going to do the general framework. A lot of that happens. What am I going to do? What's it going to cost? And then what's it going to make me? What's my return going to be? 2, you have to estimate time. You always hear stories about this, of people that haven't paid their taxes for a year, and then, whoa, I owe 100 grand or something, and all my money. So it's really making sure that you understand the tax system and what, I'll talk to you a little bit about strategies and things like that as well. But certainly that's going to be more on your CPA and things like that. 3 is to use the proven models and systems of both the MREA chart of accounts. We're going to go through what that is, and the career growth initiative. Okay? And so that's really talking about how do I grow this. And then 4, it's to be fiscally savvy by reviewing your financials monthly. Who does that right now? Okay, so Tyler, you do it. Therese, Judy, Angie, do you guys your first monthly?
Unfortunately, I don't.
And it's very common, right? Like, but to be able to know your numbers is very, very important.
No, I don't.
I'm sorry, what's that, Judy?
I said I don't.
Well, I'll talk to you a little bit about some systems that'll help with that, right? 5 is to pay yourself a salary, right? Think about it like you're getting paid a salary versus most agents will just say, hey, I got a commission, right? Like, let me put it into my personal bank account. And like, that's kind of it. But there's actually a ladder of things that should happen. And then 6 is to prepare now for a financially secure future. So do you know what you're doing it for? Do you know what you're saving for? For me, investments are very, very important. So as you guys can see, it's a large part of my life and what I do. And so, we've been prepping to make sure that we're totally set for the future. Financial health kind of being unsound, it inhibits opportunity growth, reduces your effectiveness. Like you could go sell $30 million in real estate and still be broke. Am I right? Yeah. I know agents like this, right? These are the agents that have the flashy cars, the big houses, the big watches on their hands, right? And yet they're not actually super financially secure. They don't know their numbers, things like that. But if you are sound, if you understand your numbers, if you have a budget, honestly, it's probably going to help you sell more real estate because you're not going to be laying asleep at night thinking like, okay, what's my plan? Like, how much money do I have? What's closing right now? Like, you're going to trust your plan. And one of the big things too is you make your money work for you. So when you know how much you're saving and how you're saving, you can actually put together an investment plan too, which most agents don't have. There's an opportunity too that I'll share with you guys as well at the end here if anybody would like to do any investing in a really, really simple way. So we'll talk about that at the end as well. So here is what most people's bank accounts look like. Like what happens, right? You get a commission, let's just call it $9,000. And then you get a check, take out your splits, brokerages and stuff like that. You get a check for $5,760. Now that goes into your personal bank account and then that person spends it. Like that is the most normal way that realtors spend their money, right? Like this is what it usually looks like. What's missing here is business savings and taxes. So let's look at it like this. This is what something that's financially sound looks like. Let me minimize this for you, Tyler. Something like that. Sorry about that. So same thing, right? You still make $9,000, you still get $5,760, but now you're going to put it into a business account. And then a portion of that is going to your personal bank account. And then from your personal bank account, you're going to separate out your taxes from what you can spend, and then there's a ladder here of what kind of taxes go out. But here's the key thing is they've saved for business. That's the biggest thing. So if there's one simple thing that you can do, my little brother just started a massage business. I went to massage school and then now he's a massage therapist. And so he came to me a couple of weeks ago and was like, hey, I'm ready to start an LLC. You know about this stuff. Like, can you help me do that? I said, an LLC, like, do you have a bank account? I said, no. Do you have a credit card for it? No. And I was like, forget the LLC, right? Like that LLC is everybody thinks they start. But in reality, if most agents don't have an LLC, they have a separate account that is just for business. It doesn't even have to be labeled a business account. It's just in your mind, this account only has business stuff coming to it. It doesn't matter what the label of it is. Same thing with a credit card. It can be a personal credit card, but if you know I only spend business expenses in this, then that's fine. It doesn't have to have the label of business in both of those. And so most people don't really get that. And so you have a business account, you have your personal account, you have a business credit card, you have your personal credit cards. And so if you just do that, you're going to be in a good financially sound place. That's the first place to start. And then what you just start to do is on a regular basis, you say, okay, every month I'm going to transfer X amount of money from my business account to my personal account. It's the same thing as paying yourself a salary, right? So it's really just thinking about it like that. I'm going to pay the business, and then the business is going to pay me. And there's going to be some money that's left in the business for this 1,728. That's going to take care of business expenses. It's going to be your marketing. That's going to be all of that stuff. And then the other big part of this is make sure you're saving for taxes. So does this make sense? Are there any questions on this?
So you recommend 40% to put aside for taxes? I always think people say 30%, so you recommend 40.
Yeah, I think a safe place is 40, right? Like the model is 40%. I will say this. My model for taxes is a little bit different. Reason being, I own a lot of real estate, and so I pay very, very minimal taxes because we end up depreciating a lot of it. So mine is much smaller than that. Mine's more like the 15% realm. But if you're a normal person that doesn't own a lot of real estate, doesn't have a lot of deduction, 40% is really where you should be. Yeah, but that's 40% of what you've gotten after you save business money. Right, so it actually maybe is a little closer to 30% of that check you take.
So that check you take 30% of.
This is very. I have a comment. This is very good because you hear everybody is telling you open LLC, open LLC. You have not even started working a dollar, but once you open LLC, it's triggered that you have a business and you have all other fees that will be falling into it while you have not even started making an income. So this structure, what you have right now to begin with, it seems very, very good. That's what I can say.
Yeah, you're exactly right on that. You pay $500, $600 a year for the filing fees for your LLC, and if you're doing it part-time, like that's a decent amount of your profit, maybe. And so yeah, like we own a lot of different entities, and it's like, people are like buy a new or get a new LLC for every property you own. We have 83 units, like if I was to do that, my tax returns would look crazy. So you got to take things with a grain of salt from people. But yeah, I don't think you hear that enough. I think people just say LLC because they heard it. Right? It's like the thing to sound smart. But actually, if you really think it through, like what is that LLC really doing? It's really a liability vehicle. And at a high level, we're going to talk about how it can become a tax saving vehicle. But in the beginning stages, just think about your business like a business. And again, you don't even need it to be a business bank account or a business credit card. You just need to think about it like that. So at the end of the year, when you're doing your expenses, you're not like, okay, I use my personal credit card and my personal account for this. It's just, I pull all my bank statements from my credit card. I pull all my bank statements for my bank account, and that's it, right? And so it should really be that simple. Cool. And so this is just this in word form, right? It's what we just looked at in that. And so the beauty about these numbers is that they actually tell a story, right? Like this story is a financially sound person's story.
Sorry, I have a question. Sorry,
Yeah,
I have a question. Real quick, from your tax savings account, is that 50-50 on the state tax and the self-employment tax that you split at the bottom?
No, it's different. So your self-employment tax is going to be, I forget the numbers of it, but you can very easily look it up. Like that's your Social Security and things like that.
Okay, but I don't need, I mean, if I just put that amount, let's just say the 1613 on that tax savings, from that, I know that those two things will be paid, whatever that might be per year, correct?
Yeah, exactly. And then you can make the decision with your CPA if you're going to do quarterly payments of that, or if you're going to save it till the end.
Got it. Thank you.
Yeah.
Thank you.
Yeah, absolutely. So yeah, these numbers, all the numbers tell a story. And so here's all the numbers. And so everybody, it's probably good to take a picture of this slide or write this down.
Yes.
This is actually, and I'm going to add one more number in here that I think is really, really important to success here. And it actually, I think, comes first, and that's the number of appointments, because that's actually the lead indicator before you can even get to your units closed or anything like that. So I would add that in there. That's a little bit more of a nuance, but I think it's important to look at it. Because if I tell you, Angie, you gotta sell $1 million more in real estate this year, well, you're gonna have to back that out and break it down at some point, right? And so what's the earliest thing you can get to that's really tangible that you can change? And in my opinion, it's the number of appointments. And then from the number of appointments, you break it out to how am I actually getting those appointments, right? Am I calling people? Am I mailing people? Like, what am I doing? But if you're focused on the number of appointments versus your GCI or your volume, then I think you're going to have a lot more success. So that would be the first number I would put on there. Then you've got your gross commission income. This is just the commission that you make, right? The total commission before any expenses are taken out, including your split with the brokerage. The next one is your volume, right? And that's going to tell a story. If you have really high volume and really low GCI, that tells a story that you have a low commission, right? Like maybe you're taking discounted commissions and stuff like that, which could be a strategy, certainly, but that's the story that it tells. So you need to know multiple points of data to really put together a good story. Then you've got your units closed, right? That adds in another aspect to the story. The units closed and the volume is going to tell you what your price point is. And maybe your business is at a lower price point. Maybe it's a higher price point. That's a decision that you're going to make. Next one is net income or profit. This is what most people don't know. Most people don't know what their profit is because they don't run their books on a regular basis, right? The money in the bank, this is what most people do know because it's easy. You can pull out your phone and say, okay, I've got this much, right? Your multi-year trend report, how are you trending over time? This is something that the brokerage can absolutely get you if you don't track it yourself. We track it ourselves on a pretty simple spreadsheet, and that's what we use. And then the language of real estate, the lore is a really good kind of like larger area driven kind of thing. And so again, that's something that you guys probably go over in your team meeting. You know, how many months supply of inventory are there? Different things like that. So these are the numbers to your success. So if you've taken a picture of this, or I'm also happy to send you guys the slides of this as well. I don't think I put my information in the slide, but I'll get it to you guys towards the end here. So any questions on these numbers? Cool. So we've only got 60 minutes here, but I also want you guys to write down an activity. And the question is really like, this is actually a really fun question to like journal around. Take 15 minutes or an hour, however much time you can spare, to think about like, what would profit do to your life? Like, what are you going to do with your profit? Tyler, you shared a little bit with me, right? You're going to have a little bit, you'll quit your job, right? You'll, yeah, eventually, right? Like with the right amount of profit, you'll get there. You'll be able to have more kids, right? Like you're going to raise your kids without working. Travel more, yeah. Like this gets really fun when you dig into this and you start saying like, okay, what are all the things that I can do? And over time, it's going to change significantly. A lot of times, the first step for people is freedom, and then from there, you usually get to impact. Some people start with impact, right? It's not as important, you know. But it's that some people just want to grow stuff, right? They just want to be known. They want to grow something big. They want to impact others and have people on their team and things like that. And you need profit to be able to do that in a smart way. So that's your first piece of homework right here, is to journal about and think about what would you do with your profit, and then to set a profit goal. And we're in like a weird part of the year right now where we're like towards the end of the year. Really, October starts to come around. That's when you're really starting to plan for 2023. So I want you to think about it two ways. I want you to think about a profit goal to the end of the year and a profit goal for next year. And just really get ahead of yourself for next year, because you can start really taking that into your mind. This is what I'm going to do. And then you can start looking out for things like the business planning clinic and say, okay, here's my profit goal. I already have that, and I know my why as to why I have that. And so now I'm going to dig in a little bit deeper, and I'm going to figure out what's my strategy for that. So first piece of homework. Check. I'm going to put my information in here. And so send me an email, Judy, shoot me an email with the request for the slides, and my admin will get that over to you for sure.
Thank you.
You're welcome. Cool. So let's talk about some of the models around your budget. for your business. Here's the really simple model that we have. You have gross commission income that comes in. You have, and this is for a solo agent. Is everybody a solo agent?
Yes.
Yes? Okay, cool. So this isn't a team model, this is a solo agent model. So you have 100% of your income that comes in, your gross commission income. Then you're gonna have cost of sales, which is typically going to just be your split to the Market Center and Keller Williams International. And that's about 30%, right? Then you're gonna have your operating expenses, which should be around 30%. And we're gonna double click on those operating expenses. And then you're gonna have your profit, which should be around 40%, right? That's the general idea here. What you see quite often, and what I actually did for many years, is my operating expenses were very, very slim. And what happened was I actually had a really, really good coach tell me that, hey, you're choking your business by not having a 30% expenses. So if you're looking to grow, you should absolutely be hitting that number. I was really proud of being really frugal and saying like my expenses were like 5 or 10%, right? But I didn't have much admin leverage. I didn't do almost any marketing. It was just sphere of influence that I was selling real estate through. And so that really kind of put a cap on what my business could be. So now we're inching back up to that 30% profit margin. So you might be in different places here, but this is the model, right? This is what we should be looking at. So what does that mean? That means you have $10,000 come in, $3,000 goes towards your cost of sale, $3,000 towards operating expenses, and then you make $4,000. So far cry from most agents who get a $10,000 commission check and say, I've got $10,000, right? It's a little bit different.
When it says cost of sales, so operating expenses is like the marketing side, right? Like the marketing.
Yes.
Cost of sales. What is that?
Cost of sales in this model and what we're talking about really is mostly your split with the brokerage.
Okay, so what you own,
Yeah.
okay,
So the cool thing is this cost of sale goes down as you cap. Like that's the best thing about
Yeah.
Keller Williams is if you cap, like my cost of sale from a market center standpoint is minuscule. You know, we'll do somewhere around $1 million in GCI this year,
Right.
900 a million.
Right.
But my cost of sales as a team owner is my splits to my agents.
okay.
So it's actually much higher than that, right? The vast majority of the time. Does that make sense?
Yeah.
Cool. Any other questions on this?
I just have a question. Per your previous slide, we're supposed to take out whatever percentage for taxes and et cetera, et cetera. So how do you account? Yeah, like, the 40% of what our portion is going to be, is going to go to all those other things. So, where is that cost of the slide that you just showed coming from which side?
So what we're talking about here is all business side. Now that 40% profit that you're gonna make, because remember, you're only taxed on profit. So that's what's gonna be then broken out. So think about it like this, the profit goes, Angie, to your personal account. Now from your personal account, you're gonna separate out into taxes and what Angie can spend. Does that make sense?
So all of this cost that you're showing right now, expenses, and in regards to the cost of sales and operating expenses, that's going to come from my 40% that I get from my split, correct?
Your 40%, down, you're talking about the profit, the 40% profit.
Well, no.
Are you
I
on
mean,
a team, Angie?
No, I'm not. No, you said, oh, sorry, 70% you said goes to your personal account. So it will come out of that 70%. That's what I think you're saying, right?
40% is going to go to your personal account. So let's think about it like this. Let's go back to that same flow, right? You get $10,000 that goes into your business account. It's actually not even going to get there because the cost of sale is going to come out before you get your commission check, right? So,
Right.
so you got $10,000 that comes to the title company, and then you're going to get split out what goes to the brokerage, the cost of sales, and then what's going to come to your bank account is going to be 70%. It's going to be the
Right.
operating expenses and the profit. Now in
Right.
your business account, you're gonna leave 30% there because that's what's gonna be spent on operating expenses. So now into your personal account, you're gonna get 40%. Of
Of
that
70%.
40%.
Okay, so, so that's what you're saying. Out of that 70%, I need to leave 30% in that business account before I put it in my wallet. And that 30% is what we're looking, that's going to be distributed on this slide under expenses, right?
Yeah, that's gonna, and now we're gonna break down, let me see when we
I was
get
gonna say,
here.
it's much easier when you did the picture for me, the visual was like, that made me understand.
Yeah, we're gonna break down, the actual budget. But yeah, here, let's use this right here. So that $4,000 is what you're gonna take out some of those in taxes. Because remember, you're gonna write off your cost of sales. Like you don't have to pay taxes on that. You don't have to pay taxes on your operating expenses. You're writing off your expenses. You only pay taxes on your profit. And so you're only gonna take out from your profit. No idea. I wouldn't think about that. Does that make sense, Angie? Does this help?
Yes, it does. Thank you.
Cool. Cool. So this is another way to put it, right? Like this is the way that money should flow. Income minus expenses equal profit, right? Pretty simple kind of thing. And so they've got an example here. I think, we've kind of given an example there. But let's talk about your operating expenses. So this is just the cost of running your business. So you've got rent, you've got auto, you've got salaries if you have people on salary, or another one of these might be contracts to close. Like if you're actually hiring a service to do that, a lot of times that's going to be where this lives in a solo agent standpoint. You've got insurance if you're paying insurance, right? Some people will have additional E&O insurance, or you'll have car insurance that will be paid out of the business. Professional services, right? Do you have a lawyer do anything? Is your accountant doing stuff? Marketing and advertising, this is probably the biggest one for a solo agent, is your marketing and advertising. Your equipment and supplies though, your computer, right? Like anything that you're buying for that, and then your education. And so these all have numbers associated with them. The biggest thing is just to know your expenses. And again, the easiest way to do this is just to have one bank account and one credit card that stuff comes out of. And now you can very easily know what you spent last month on your business expenses. I'll also point this out, there are things that are gray areas. There's actually a chart we're going to get to a little bit later, like your car, right? Like how much your car is written off, different things like that. So just know that there are going to be things that are going to be gray areas that your accountant, you're going to have to make a decision on. Do I write that off? Do I pay for that personally? A great example of this is like, as a teacher within Keller Williams, when I go on travel on a vacation, I try to find a local Keller Williams and teach at, right? So does that become a business expense? Do I count that in my numbers that I'm looking at? Or is that really just like a hidden way of like, using some tax loophole kind of things? So those are all decisions that you'll make. And that's just something to highlight and to know that.
There's a Keller Williams office in Santorini.
What's that?
There's a Keller Williams office in Santorini,
Where's Santorini?
Greece. It's one of the islands in Greece.
Okay, there you go. Yeah. So like, if you go there often, like, I don't know, talk to your CPA, but you might be able to do at least a portion of it. I had a buddy that's in Hawaii right now. He has a hard money business, and he has a hard money loan out. I think 2 hard money loans out in Hawaii. And so he went to Hawaii, and business is paying for it, right? Again, we talk about something in Keller Williams, which a lot of people actually don't talk about, but I think it's one of the most brilliant things within Keller Williams, is we have an accounting system that's called above the line and below the line accounting. And the reason why that's important is because there are things that the IRS says we can write off, like my buddy's trip to Hawaii, but he's not going to put that into his numbers, right? He's not going to show that as like a true business expense for his business to grow and do things like that. And since Keller Williams profit shares, it allows the owners to still do some of that stuff, but you have to count that below the line. So you actually have to profit share before you go buy your new car, before you go do this other stuff. And so I think it's a brilliant way of running stuff, because you want to know what your true profitability is if you took out some of those extras that the IRS lets you pay for. But if you were really just saying like, this is my business, you probably wouldn't do it. And so those are like, that's just one way to think about it, a little bit beyond the scope of this class, but that's how I like to think about it. Like, what do I pull out? Right, my wife does a little bit of work for the sales team, but we pay her a decent salary as a tax strategy. So when I'm doing my numbers, I pull a lot of the salary out of me looking at how profitable we are. So there's really two things, right? Like you've got profit and you want to make sure that you're growing your business and you're investing in your future with that profit. So this is another way of kind of breaking down the same thing, right? It's just planning your future with your profit. But the big thing here is the activity behind it. So you want to set, we already talked about your first activity, right? Your first piece of homework is to go figure out what do you want your profit to be. Now, when you know what your profit needs to be, now you need to figure out, okay, how much money do I need to bring in? How much GCI do I need to do that? So if you want to take home a net profit of $250,000, then that's going to be the 40%, right? You have 60% of expenses, 30% going into operating expenses and 30% into cost of sales. And so that means you need to bring in a gross profit of $416,000. And that means your gross commission then has to be over $1 million to be able to do that. And then so now you can break it down and say, okay, well, I need to, my average commission is up, you know, whatever this is showing at $7,500. And so they actually need 139 deals to get to this. And so that 250 is post taxes as well. So that's why it's kind of adding all of that in there. So you got 40% for taxes there, leaves you with what you need before you pay your taxes. So you need to make 416,000 before taxes. And then that means before expenses, you need to bring in $1,041,000 essentially. And then that leaves you with an operating expense budget of $312,000. That's your 30% there. So these are pretty big numbers. This is more like a team kind of number here that you're looking at. But that's generally how you do it. So I want to make X amount of money after taxes. Let me figure out how much money I need to make before taxes. Let me see how much money that means I need to make in gross commission income. And then I can also pull out my operating expenses budget, because we're going to double click on the operating expenses budget. And that's really where you want to figure out, okay, where is my money going from an expense side? So any questions on that? That one's a little bit confusing just because it's numbers, right?
Yeah, I have a question. I have a question because the figures are in red. It is where I'm going, right? It is my projection.
Yep.
Am I correct?
Correct.
Okay.
Yeah, it's a live example, right? So you might say, okay, my net profit post taxes, what I want to take home is $100,000. You divide by 0.6. That gives you whatever that number is of your gross profit you need to make. And then the difference there is what you pay to taxes. You divide that by 0.4 and that gets you your actual profit number, or I'm sorry, that gets you your actual gross commission income number. And then the difference between the two is what you spent. Does that make sense?
Yes.
Yeah. We can test it. If we have some time at the end, we'll do it with some smaller numbers as well. So, but this is pretty much just put it into the put it into a spreadsheet and it calculates it, you know. Cool. So let's talk about who should be on your financial team. And so in the beginning, you actually might be some of these people, particularly your bookkeeper. I actually think that it's a really good exercise if you're at all numbers oriented to be your own bookkeeper. I do the vast majority of our bookkeeping in our investment business, which helps me get a really good pulse of what properties are profitable, which ones aren't, you know, like what's going on in the business. And so I think that that's one thing as a business owner, you should always generally know how to do some bookkeeping. And the cool thing about real estate sales is it's really simple. We're not doing any crazy stuff like buying buildings and depreciating assets and things like that. It's pretty much just how much money did you bring in, how much do you have in expenses, and then what's your profit. So I would highly recommend that you either be your own bookkeeper or you work with your bookkeeper really closely so that you know your numbers. Now, that's also the first piece of leverage that I would have if you're not able to consistently do it, because it's relatively cheap. A bookkeeper is not that expensive. I'm a huge fan of QuickBooks. It's not super expensive. You can get the lowest grade level, and I think it's like 20 or 25 bucks a month. But it'll import all of your stuff, and literally all you have to do is have somebody help you set it up. We're going to talk about the charter of accounts, which is basically how you set up your bookkeeping. And then you just go in there and you say, okay, this was this type of expense. That was a marketing expense. That was a meals and entertainment expense. That was an education expense. And then you can pretty easily go into and figure that out. The second person, I'm sorry, what's that, Judy?
Is there any existing software for real estate to do this?
QuickBooks is software, yes. Yeah,
Okay.
there's a couple different like options now, but QuickBooks Online is like they're always running a sale. I think for like the first 6 months, it's like $7 a month or something like that, and then it goes up from there. So yeah, I'm a huge fan of that. Other people use different software, but I think that's pretty easy.
Okay, thank you.
So the second person is your CPA and your tax advisor. Pretty simple, right? You want to have probably at least a mid-year meeting with them, because there are some things that they can do. We're going to talk a little bit about it. That if you're profitable enough, you might actually want to start putting some tax strategies in place to reduce you paying 40% of your profit towards taxes. Then you have your banker, right? Like you might want some lines of credits for your business, or just for like your own life of buying your own properties and things like that. So you want to have some people that you can go to. We have a line of credit, right? Our line of credit's like 6% interest. And so I never hold a balance on my credit cards. If, for some reason in a month I don't want to pay it all off, I'll pull from our bank line of credit. That's just much cheaper, right? You'll probably want some sort of attorney on your team. If you do want somebody to file your LLC for you or something like that, but at least somebody that you can bounce stuff off of. An insurance agent, you might want additional liability insurance for your company. You might want errors and omissions, right? Where you mess something up, and the brokerage has a certain amount of that, but you might want additional versions of that. A financial planner, I am a huge advocate for being your own financial planner, at least to an extent, but being able to bounce it off of other people. Not necessarily just saying, here's all my money, but just saying, hey, what are some things that I can do? They usually work closely with your CPA or your tax advisor. And then finally, your coach, right?
Many years, like.
It depends how purposeful you are with it. I think the first two you need very quickly. You could probably go your whole career without really needing an attorney. An insurance agent, again, these people, the cool thing is like we deal with a lot of these people anyways.
Right.
Most of your title companies have attorneys they're either attorneys in the title company or they know of people that are. So it gets to be, pretty easy. Again, a financial planner, like they're dime a dozen. The right friend, they call you, right? You got your Northwestern Mutual guys,
Right.
or things like that. And you start to figure out what's actually a decent plan for me. So it really doesn't take that long, but you don't need them all starting out of the gate. But what I would highly recommend is that everybody has a good accountant and a good bookkeeper. And if you need any recommendations for either of those, I'm happy to send you some recommendations.
That would be from like your first deal ever.
Yeah, and again, you might just, maybe you don't hire the bookkeeper, but maybe you have them set up your chart of accounts, right? And so like it's probably, probably not even a couple $100 to do it. Right? You could YouTube it and figure it out, which is pretty easy. But yeah, if you have any sort of like financial background, then you can probably do it. But you just want to check with people or get somebody in the brokerage that knows what they're doing to sit down and help with you. Right, bookkeeper, you don't have to necessarily pay, but you want somebody to have that responsibility. And if you're not good with that responsibility, then you want to pay somebody for the accountability that it causes, because they're going to send you reports. This is one thing: if you hire a bookkeeper, make sure that you have a date that they're going to send you a profit and a loss and a balance sheet statement of every month. So by the 10th of the next month, you're going to give me last month's profit and loss and balance sheet. And they should very easily be able to do that. And now you've gone from, I don't review my numbers on a monthly basis, to it's literally just an email that you open up and you look through. And then now you know the story of your last month. Good question. Any other questions on that? So activity number 2 is write down your team, right? Who do you have and who are you missing? And I put a little caveat down here, that last one was me editing these slides and saying, you can be some of those people for now. Like, that is okay. Probably not your own attorney, unless you are a licensed attorney. But to be your own bookkeeper, I think is the biggest one to highlight there. To maybe be your own financial planner. And I think those things are okay. Or you can get free advice associated with those things and you do the work of it. So that if you are a new agent, you're not spending a ton of money out of the game. Cool. So here's the accounts that you should have. And again, I would say that, like, you don't necessarily need a business savings. You can keep it in your business checking account. But I think a business checking, business credit card, and a tax savings account. I think those are the important ones to really have. And if you'd like, you can have a business savings account. But you know, for me, we would never really use that. I just flow it through my personal savings account at that point. All right, so here's what we kind of talked around a little bit, is like the LLC, the partnership, the corporation. You're only going to use a partnership if somebody else has an ownership interest in your sales business. So the vast majority of people are never going to have this. By default, you are a sole proprietorship. So on your taxes, it's literally just going to flow through to your personal taxes, right? Like, you don't have to do anything for the sole proprietorship election. You just are that. So then the LLC is when you actually file and say, this is the name of my company. But for all intents and purposes, if you don't make a election of a S Corp or a C Corp, then you are a sole proprietor still as an LLC. From a tax standpoint, it all flows through to you. It doesn't really matter that much.
So if I don't get an LLC this year, but I go to, let's say I made a couple of days, I go to file my taxes in January, February, it would automatically be sole proprietor.
Yeah, you don't have to do anything. And even if you have an LLC, it's still going to be reported. Like, you're not going to have an LLC tax return for that.
Okay.
It's just going to be you, Tyler. Right? So like I've got a lot of different tax returns for all my partnerships in the real estate owning side of stuff.
Right. Okay.
But my personal Blue Key, it is an LLC, Blue Key team, but it doesn't have its own tax filing. It just goes on my personal taxes. Now, there is a difference, and you'll hear this sometimes. I'll give you a very quick version of why this is. There's something called an S Corp. And what an S Corp is it's an election from an LLC. So you do have to make an LLC first, and then you say, I'm going to be an S Corp. And what happens is you pay yourself a salary. So this really starts to make sense if you're making like above $100,000 in profit. And so what happens is you pay yourself a salary. So let's say you pay yourself a $50,000 salary. Now that $50,000 is taxed at the normal tax rate you would be at, self-employment taxes and things like that. The other $50,000 is taxed as investment, because essentially what you're telling the IRS is, I am working a salary for half of my profit, and the other half is my work that I've put in and invested over time that is just coming to fruition here. So I don't have self-employment taxes on that other $50,000, and on that initial $50,000, I have self-employment taxes. So you're saving a couple percentage on your self-employment taxes. So that's why you would do an S Corp. Again, that's a deeper conversation for your CPA. But to even know that there's something called an S Corp is important. And then to know that usually the threshold I hear the most is about $100,000 for that to make sense, because you're going to have to hire a payroll company that's going to pay you your salary and things like that. So unless you already have that set up with admin and stuff like that, it probably doesn't make a lot of sense. And then the corporation, again, very rarely are you going to get to this point, but a corporation has a lot of really strict rules. You have to have board meetings, board members, things like that. And so rarely is anybody going to end up being there. So just take a picture of this. This is just when different taxes are due. So I think Angie, you asked the question earlier on of, you know, like you're saving your taxes, but like almost like how do I pay my federal taxes versus my self-employment taxes? And these are the dates where things are due by if you do it on a quarterly basis, if you estimate your taxes. And what will happen is if you don't estimate to pay your taxes, there's going to be a small penalty when you pay your full taxes. But it is relatively small. I don't worry with the quarterly, you know, that's just my personal thing. A lot of people do. But I use that money as operating capital in my investment business, and then I pay it at the end of the year. So that's just the way that I do it. Cool. So we talked about these a little bit, but you're going to have your income tax. So you've got your federal tax, your Maryland tax, your local tax. If you have local tax, we don't have a lot of those around here. Then you have your self-employment or employment taxes, depending on if you're an S corp or if you're your regular stuff. Again, this is just know that these different things exist because your CPA is going to separate them out for you. So again, just a very typical, like we've kind of talked around this, right? Like you've got a profit goal of $140,000. That's just over $11,000 monthly. You want to save X amount for taxes. So Jim here only has $7,000 for personal expenses. And so this is, Angie, this is breaking out that 40%. Remember that 40% profit that's left, this is that breaking out from it.
So if we take out 4,667 a month.
Yep, and putting that into that tax savings account, and then either paying it quarterly or yearly, and then he's left with that $7,000. So this is a good chart too. So, you know, feel free to take a picture of this, or I'll send you the slides. But this tells you what's personal, what's business, and what's both. Now, both is where I told you it can get to a gray area, right? The vacation down there is probably like, it says it's personal, right? But if you do some business stuff on that vacation, like what do you call it, right? So it's just the idea that there are things that are like pretty clearly not business related, right? Like your home groceries for your family, like you're not going to write those on. But then there's some things that are both, right? Like your automobile might be both. Your cell phone might be both. Like what percentage of the time do I spend on business versus personal stuff? And the biggest thing with anything that you're going to write off is just, does it make sense? And could you explain to like a regular person why that is a needed business expense? If your answer is yes, then you're going to be good writing that off, most likely. If the answer is no, then that's where you might be in a gray area. So a couple of things to be aware of. How do you do your auto deductions? Most people do mileage. And for mileage, you need a mileage log. Now, there actually, I have heard something really interesting because I do a really bad job of this, right? But basically what the IRS says is that if you're audited and you can recreate a mileage log, then you'll be okay. So what does that mean? That means if my calendar, like my calendar is really, really tight. It has every hour of every day accounted for, even the weekends for me. So I could go in and recreate where did I drive to, right? Like all of this other different stuff. Or if I just have, like, I have my truck is just my business truck. We've got 4 vehicles, right? So I only use that for business. So I know I don't need to separate anything else. Like I only use it for that kind of stuff. So that's something that like you just want to figure out how good are you tracking this stuff? There's apps for it and things like that.
Yeah, I use Strive, like showing.
Yeah.
Just turn on as soon as I get on.
That's a great one. So Tyler uses Strive. I haven't heard that one. So yeah, I mean, that's something really smart to do. Then you've got your home office deduction. So if you have a separate space that is only for your office and your business, then you can write off a portion of your home expenses. And so that's something to keep back up too. Entertainment and meals, right? There's certain parameters around this. How much can you do it? Like what business is happening, things like that. And then same thing with business travel. So you want to like double click on these to make sure you understand, you know, what things you can or can't do with those. So talking about the goals versus the actuals, right? Like pretty simple, right? This is a really, really simple breakdown right here. Like a goal is what you expect to hit and your actual is what you actually hit. the key is to live in the actual while striving for the goal. So like we're at the point in the year where I'm talking to some of our agents in my market center in Millersville, Cohen's flagship, and they're still talking about their goals, but they're not readjusting for reality. Like there are people that still say, I'm going to sell 15 million in real estate, and they're only at 5. You know, and you look at the year, like you're over 50% of the way here, and you're a third of the way to your goal. So like, what's reality? Like, what are you actually going to do? And so there's 2 things within profitability and within your finances that you need to know your actuals of. And we alluded to this, but the first one is your profit and loss. So you want to know on a monthly basis, and a year-to-date basis, how much money have I made this year so far? Then the second is a little bit less important for this, but I think it's important to talk about what it is, because this is, I think your balance sheet is really important in your personal life. And so the profit and loss is your income minus your expenses, and that's your profit, right? Your balance sheet is your assets that you own minus your liabilities, what you owe, and that gets you to your equity. And your equity is essentially your net worth, right? And so you can add different things up to this. Your assets. How much money do you have? That's your first asset. What are your automobiles worth? What are any other assets you have? Jewelry, furniture, things like that. What are they reasonably worth? Do you own real estate? What's that worth? Do you have a brokerage account? What is that worth? Minus your liabilities, which is basically any debts that you have on any of that stuff. Your IRS payment will be on here, right? Like your taxes are a liability every year. And then that gets you what your equity is. And I think that it's downplayed how important it is to know your net worth, because your net worth is eventually what you're going to live off of when you retire, right? And hopefully you have a big enough net worth that it can actually make an investment for you as well. So in your business, it's probably going to be very minimal. Maybe your business buys a car, maybe it owns some equipment, things like that. But for us, real estate sales is a very non-capital intensive business. So we're not going to have that many assets. Our biggest asset is going to be our bank account for that, most likely. So any questions on the P&L or the balance sheet? All right, so this is probably a really important slide to take a picture of too. This is your 30% expenses, how it should be broken out. And I think it's just really important to know this, right? And so your 15.5% at the top here is salaries and benefits. So it's going to be benefits to you too. So that would be like your health insurance and things like that. This would also be if you're not paying a salary to somebody. So let's say you don't hire an admin, but you're paying a service to do a salaried-like thing. So your contracts to close is the most average version of that, right? So if you pay $300 or $500 per contract to have it contracts to close, you're going to count that in like the salaries bucket. Then you're going to have your lead generation. This is essentially your marketing budget. And those are your 2 biggest items right there. So 15.5% for salaries and benefits, 9.6% for lead generation. So if you're under that, you're probably starting your business. If you're over that, you're probably inefficiently using that capital. So that's what that story would be. You got education and coaching, that should be 1.5%. Occupancy 1%, right? So you should only be spending about 1% of your total income on your office. Supplies and office expenses 1%, tech 0.7, auto insurance 0.5, and equipment purchasing 0.3, right? But this is a really good model, mainly in the top 2, to figure out where am I spending money, where am I not spending money. Do I want to grow my business bigger, or do I want it to just be a lean machine? So any questions on this? Jack.
Can we have the slide after the presentation, please?
Yeah, if you email me, I put my email in the chat there. Email me and I'll give you the slides.
Okay, thank you.
Yeah.
Because it's so important that, I mean, the picture that we are taking are not that much.
Yeah, that's true. My email is acarroll, 2 R's and 2 L's.
I got it. I wrote it down.
aw.com. Sorry, I'm telling Tyler in class here because I put it in the chat for you guys. So, cool, you got it? You're welcome. Cool. Another way to put it, I'm not gonna break this down, but I'll send you guys the slides and you can see it. It's literally just taking an example and walking it all the way through to your profit goal. And so this is the profit goal of $90,000. So that's maybe a little bit more aligned with a lot of people versus the big kind of taker. Yeah, absolutely. Good. And the idea here is that they actually had a budget and then they had an actual. So you can actually look at this and say, okay, they were $5,000 short of their GCI goal. Their cost of sales was a little bit lower than it was expected to be. Their salaries were a little bit lower, but the lead generation was massively bigger than what they expected it to be. Their education and coaching was a lot more than they expected it to be, right? Their technology was more, and then their auto was more. So you actually see that even though they paid less in the cost of sales and other stuff, their profit goal was lower than what they expected it to be. So this is a really good example. This is just real life stuff. So this is what like a charter of accounts would look like within your profit and loss. So you're going to break out your income. You're going to have listing income, buyer income is what sales income is, referral income, and leasing income if you have one. Right? So you'll have 4 accounts when you're setting up your QuickBooks or your Excel or whatever it is. You'll have 4 income buckets there. And then if you have commercial, you might want to separate that out too. But it is important. I think that the biggest difference is to know your listing income, your buyer income, and your referral income. Just to see like, where is my income coming from? Where do I want to spend more time? Where do I want to spend less time? Then you have your cost of sales, and this is everything that goes in your cost of sale. So you got your commissions to the office, royalties paid to KWRI, listing cost of sales, buyer cost of sales. So if you're paying an agent for either of these, that's going to be in there. And then if you're paying any referral fees or something like that, that would be in the commission scale. And then you have the expenses. So this is just everything that we talked about that had a percentage in it. Salaries, management, administration, other salaries, right? So you might actually break those things out in different salaries. You're gonna have your benefits, you're gonna break those out. You're gonna have your lead generation, you're gonna break those out. And that's probably the biggest one that you wanna really break out is your lead generation. You might even wanna break it out to online ad spend, or for us it's seminar spend, or whatever it might be. You might wanna break it out really deeply in that, so that you can say, I spent this much and it made me this much, right? You want to be able to hold your expenses accountable. And then this would be another one, right? Again, just continuing to break it out. And so you might not use all of these categories here, but it's good to have it because it's harder to add it back in after the fact. Figure some more, right? And you might have some things that aren't on here that come up, whether it be a lead generation strategy that you're doing or something like that. And then you eventually get your business profit. 2 types of budgets, your personal budget, right? The idea here is just to live below your means. I teach a lot of investing classes, and I always start off with talking about the fact that there are a lot of people that will tell you that you can invest with 0 money. But I will tell you it is a lot harder and a lot riskier, and it requires a lot more time to do that. So I highly recommend make enough money to live below your means, make a difference. That's your savings, and then invest your savings. It's way easier than trying to figure out how to do something with no money. Living below your means is important, right? And have your business budget, right? We just talked about that. So does anybody have a business budget? Anybody online?
No, that's what I'm saying. I think this class needed to be taught like before we even learned how to do the contract.
Yeah. So this is going to be activity 3 for you guys as homework, which is to build a budget. So I'll send you these. So literally you can just take it. I don't even think you need to, you can break it out this far if you would like to, but I think really just breaking it out to this level right here. Just use the percentages. Just take how much money, how much GCI you'll think you'll make, and then run it through this kind of ladder here, and then you'll understand where your true profit is. So that's activity number 3 for you guys. So the biggest thing that you want to do, and this is mainly in your marketing and ad spend, is you want to lead with revenue. So you don't want to just come out the gate and spend $10,000 a month on Zillow leads, right? You want to actually start small, and you want to say, is this making me a return on my money? If it is, I'll ramp it up, and if I have the capacity to do it. And that's where, you know, we talk about this concept of play red light, green light. So green light means that it's making you a return. And then at some point, you're actually going to need to wait for time to happen for you to know if that was a good investment or not. So you're gonna spend, and then you're gonna red light, and then you're gonna check. Okay, did I get a good return on that? If I did, I'm gonna green light again, right? And I'm gonna check it again. But if it didn't, then you're gonna pivot and you're gonna do something else. So that's the biggest thing, is don't be afraid to hold your lead generation sources accountable, and then stick to your budget as much as possible. This is an agent trend report. You can get this from your broker. Like, these guys have this on you, and there's things that only you can fill out here. So there's going to be like all this stuff they can have, right? What's your GCI? What's your closed unit? What's your volume? Things like that. But actually, when you start taking into profitability, you have to do that. The brokerage can't do that for you. So, that being said, that's all just in your financial home. Right, but you want to check how are all of your other like areas of health, because what we just talked about was like financial accountability and building financial wealth through just savings and having a budget and things like that. However, the difference here is that you want to make sure that you're spending time in all of these parts of your life. Like, how often do you see somebody that's very, very wealthy financially, but their physical health is crap? You know, or they've gotten 4 divorces, their kids hate them, you know, or something like that, right? Like, that is the thing. So you want to make sure that you're well balanced. That is pretty much it. Any questions on anything we talked about? I think we are a little over an hour, right?
Can you go back
That's
to
not too bad. I'm sorry, what's that?
Can you just go back to the other page that had your information on it?
Yes, yeah. So let me add one thing, one ask from you guys real quick. So if everybody could pull out, well, you guys online are already on your laptop or your phone, but if you could go to kwueval.com, and this is a review for me, and this is basically to let Keller Williams know that I came and I taught this course. And it's also to give me some feedback, like, how did you like this course? How did you like me as a teacher? And those are the big portions of it. So when you go to kwueval.com, it's going to ask you, is this a market center or a regional event? It is a market center event. And then it's going to ask you, I think the name of the course, is that what's next? Yeah. So the name of the course is Agent Financials. It might be Profitability, Agent Financials. It's Profitability. Okay, so go down to the P's and it'll be Profitability, Agent Financials. And then when you get to Instructor, go all the way to the bottom and say Instructor not in dropdown. And just type in my name. It's on this first bullet right here. It's Austin Carroll, 2 R's and 2 L's in Carroll. And then I'll give you guys a minute or so here before I talk about one of our investing opportunities. So I'll give you guys a minute to fill that out real quick. And then I'll be hanging out for questions and things like that as well.
Where do you get the list of good account, CPA that are really knowledgeable of real estate?
Good accountants and CPAs.
Yes.
If you email me, I have a really good bookkeeper. I'm actually interviewing new accountants, largely because our taxes are really complicated with our real estate investment company. And so I will be interviewing some other people. I'm happy to share the people that I have along the way. Probably your biggest success is going to be to ask other agents in the office as well. And they'll be able to give you like, hey, here's who I use for my taxes and things like that.
Okay.
So as you guys finish up that, also, feel free to follow me on Instagram or Facebook. It's Austin Carroll RE on Instagram. Just my name on Facebook. Friend request me, I'll accept. And then we are always raising some sort of capital, but right now we're doing a pretty big capital raise. So if anybody has any money that they'd like to invest, basically what we do is we pay it as basically like a high interest rate bond. So we pay 9% annual interest paid in monthly installments that's direct deposited to you. So we've raised a lot of capital like this, and we use this to buy and renovate properties. Then we refinance them and pay the capital back. So right now, I think we've got 10 properties under construction and then 5 under contract to purchase. So we're always raising capital, and this is just an alternative to going and paying hard money numbers and stuff like that. So it's kind of cool. People get a return from us, and then they kind of get their foot in the door for larger equity opportunities and bigger commercial projects that we do. So if anybody is interested in anything like that, please shoot me an email. We're actively raising for about 200,000 or so, and that'll be over the next 2 weeks or so. So if anybody has any questions about that, feel free to email me, text me, call me, and if you have any other questions in general, just let me know. So with that, I'll hang out. Any questions before we kind of like leave here?
Nothing.
Good.
This guy is
This is very good.
investment
It's a good
capital, they pay 9%
presentation.
annually, and they pay out monthly, which is a bond, right? That was Mitri said that something that at our age we're looking for is a bond.
Sorry, what's that, Judy?
Oh, I'm sorry, I didn't realize that my mic was still on.
Oh, that's all right. That's all
I
right.
was just, you have me intrigued with the 9% and the monthly payout.
Cool. Yeah, shoot me an email. It's personally guaranteed by myself, my partner, and the LLC that owns like $14 million in real estate. So it's a pretty safe bet.
Okay.
Oh, cool. Well, if there's any questions, again, feel free to reach out to me, and look out for other classes. I live right around the corner from you guys here, so I love coming in and teaching classes. We do a lot of investment stuff, a lot of team building stuff. This is actually my first time teaching agent financials, so hopefully it was pretty good for you. Something I've been passionate about in terms of my books, and making sure that I know my profit. And so, glad that we could have that for you guys today.
You were awesome. Thank you very much.
Thank you.
Thank you all.
Thank you very much. Thank you.
Absolutely. Thank you all.